certainly reflected some enthusiasm about the ETF approval.
In a recent revelation, Mark Yusko, the founder and managing director of Morgan Creek Capital, dropped a bombshell about Bitcoin prices. He likened the recent dip to a Wall Street-BlackRock crash. But what's the real story behind this market turmoil? Let's find out. Yusko sheds light on a well-known tactic in the financial world: manipulation. He explains how futures markets can be used to artificially drive down prices. It's the classic playbook maneuver: talk down the asset, create fear, and then swoop in to buy at a lower price. Drawing from Wall Street lore, Yusko recounts the tale of Dwight Anderson and Julian Robertson. Anderson's proposal to buy copper was met with an unexpected directive: sell first, spread negativity, then buy low. It's a strategy as old as the markets themselves. So what's the connection to Bitcoin? Yusko suggests that BlackRock's interest in the cryptocurrency space could be influencing the recent price drop. Could this be a calculated move to drive prices down before a major buy-in? Yusko continues to unravel the mystery behind Bitcoin's price drop, pointing to a favorite Wall Street tactic: price suppression. In a recent chat with Anthony Pompliano, Yusko reveals how big players like BlackRock meticulously assess markets before diving in. If prices need a nudge downwards, they make the asset less appealing to others. According to Yusko, BlackRock might have been playing this game with Bitcoin since last year, way before spot Bitcoin ETFs got the green light in January. Rumors of price manipulation by BlackRock and Fidelity have been swirling for a while. Critics of spot Bitcoin ETFs cite the shady tactics of big banks like JP Morgan as a cautionary tale. They also highlight the SEC's actions against the crypto industry, often coinciding with sudden price dips. Now, the SEC's gaze has shifted to Ethereum and its foundation. Reports suggest the SEC is gathering intel against the foundation, aiming to label the top altcoin as a security. As the regulatory storm brews, the crypto market braces for more turbulence ahead. Are these events linked, or is it just another bout of crypto market roller coaster? Yusko sheds light on the unusual market behavior, emphasizing the downward ramps in the evenings or mid-afternoons, driven by futures market activity. He points out a striking trend: most stock market gains occur overnight, not during regular trading hours. Similarly, he highlights that all gains in Bitcoin ETFs happen overnight, hinting at orchestrated moves by big players selling in the futures market just before closing time. They're driving prices down deliberately. ETFs are forced to buy at the last minute of the day, setting a price for Bitcoin. But here's the catch: they only acquire the Bitcoin overnight or settle it the next morning. By pushing prices down at closing time, they create an opportunity to capture gains when the market opens higher. This strategy isn't exclusive to Bitcoin ETFs. It's a common pattern across big stocks too. Futures markets allow for manipulation, as contracts can be written without the need for physical assets initially. This enables players to influence prices without actually possessing the asset until settlement. Recently, there have been instances where significant Bitcoin purchases were made after issuing debt. While it's unclear if this aligns with the observed market behavior, it adds another layer to the ongoing saga of Bitcoin's price movements. Would you prefer buying at high or low prices? Obviously, low prices make more sense. According to observations from analysts like C15 Capital, entities connected to BlackRock seem to be strategically accumulating Bitcoin, especially before the launch of Bitcoin ETFs. This includes wallets like Mr. 100, consistently buying into dips. While it's unclear if this directly involves BlackRock's top brass like Larry Fink, it suggests a coordinated effort to meet the demand for their Bitcoin ETFs. In another development, reports indicate that the U.S. Securities and Exchange Commission is leveraging Ethereum's transition to proof of stake to potentially reclassify it as a security. This regulatory scrutiny adds another layer of complexity to the crypto landscape, impacting not only Bitcoin but also other leading cryptocurrencies like Ethereum. The SEC has reportedly subpoenaed 3 prominent crypto companies for records related to the Ethereum Foundation. This investigation, as per Fortune, might provide regulatory grounds for classifying Ethereum as a security. This could complicate matters for spot Ethereum ETF applications, including those from BlackRock. Additionally, the foundation disclosed on GitHub that it might be under investigation by a state authority due to the SEC's actions. In light of these developments, ETF analysts Eric Balchunas and James Sert from Bloomberg have adjusted their expectations for ETF approvals. They now estimate a significantly lower chance of approval by the May 23rd deadline, dropping to just 25%. This sharp decrease contrasts with their high expectations for Bitcoin ETF approvals last year, highlighting the evolving regulatory landscape surrounding cryptocurrencies. The sudden drop in approval prospects raises questions about the future of cryptocurrency ETFs and the broader regulatory environment. It suggests a growing caution among regulators and a re-evaluation of the risks associated with these financial products. The contrast with last year's optimism underscores the unpredictable nature of regulatory decisions in the crypto space. One key factor influencing the outlook for ETF approvals is the recent scrutiny faced by the Ethereum Foundation. Reports of subpoenas from the SEC and investigations by state authorities cast a shadow over the prospects of Ethereum-based ETFs. The potential reclassification of Ethereum as a security adds further uncertainty to the equation, potentially complicating the approval process for ETFs tied to the cryptocurrency. Yusko's insights into the regulatory dynamics behind ETF approvals shed light on the complex interplay between institutional interests and regulatory decisions. His observation that BlackRock's entry into the crypto space signaled a shift in regulatory sentiment underscores the influence of major players in shaping the regulatory landscape. However, Yusko's skepticism about the approval of additional crypto-based ETFs beyond Ethereum highlights the challenges ahead for market participants seeking exposure to digital assets through traditional investment vehicles. In the midst of regulatory uncertainty, Bitcoin's resilience in the market is notable. Despite the turmoil surrounding ETF approvals and regulatory scrutiny, Bitcoin continues to demonstrate strength, with recent price gains signaling investor confidence in the asset. As the new trading week begins, the potential for spot Bitcoin ETFs to break records and contribute to further price appreciation underscores the ongoing evolution of the cryptocurrency market. Yusko holds a belief that Ethereum ETFs might see approval post the 2024 US presidential elections, but he doubts the likelihood of more crypto-based ETFs thereafter. Returning to the interview, he initially dismisses the possibility of further ETF approvals. He attributes the approval of the Bitcoin ETFs to pressure from the courts rather than regulatory eagerness. However, Yusko suggests that the decision-maker behind these approvals is likely BlackRock, rather than regulators like Gensler. Despite his earlier expectation that only BlackRock would gain approval, he acknowledges the approval of other ETFs. He also discloses his investment involvement in companies associated with these ETFs. Looking ahead, Yusko doubts the SEC's motivation to expand ETF approvals, as they haven't faced external pressure. However, he acknowledges the potential influence of BlackRock's interest in certain ETFs, which could sway regulatory decisions. Ultimately, he speculates that decisions regarding ETF approvals hinge on whether BlackRock sees profit potential in them. Yusko reflects on the journey of ETF approval, tracing back to the Winklevoss twins' idea 11 years ago. Despite initial rejections, last June, BlackRock's entry signaled a seismic shift in regulatory sentiment, paving the way for subsequent approvals. He acknowledges the possibility of an Ethereum ETF approval due to its substantial market cap. How will the shifting sentiment among ETF analysts impact the future of cryptocurrency, ETFs, and the broader regulatory landscape? In light of recent developments, ETF analysts Eric Balkunis and James Sert from Bloomberg have adjusted their expectations for ETF approvals, estimating a significantly lower chance of approval by the May 23rd deadline, dropping to just 25%. This sharp decrease contrasts with their high expectations for Bitcoin ETF approvals last year, highlighting the evolving regulatory landscape surrounding cryptocurrencies. The sudden drop in approval prospects raises questions about the future of cryptocurrency ETFs and the broader regulatory environment. It suggests a growing caution among regulators and a re-evaluation of the risks associated with these financial products. The contrast with last year's optimism underscores the unpredictable nature of regulatory decisions in the crypto space. Shifting gears, Bitcoin's performance remains robust, with a 2% increase in the past 24 hours and a 6% rise over the past 5 days. As a new trading week kicks off, optimism surrounds spot Bitcoin ETFs, potentially driving prices higher. Despite the turmoil surrounding ETF approvals and regulatory scrutiny, Bitcoin continues to demonstrate strength, signaling investor confidence in the asset. Morgan Creek Capital founder Mark Yusko offers insights into the regulatory dynamics behind ETF approvals. He observes that BlackRock's entry into the crypto space signaled a shift in regulatory sentiment, highlighting the influence of major players in shaping the regulatory landscape. However, Yusko's skepticism about the approval of additional crypto-based ETFs beyond Ethereum underscores the challenges ahead for market participants seeking exposure to digital assets through traditional investment vehicles. What are your takeaways from Yusko's interview? Do you view this as a BlackRock crash with no lasting impact on prices? Share your thoughts in the comments below. Don't forget to like, subscribe, and turn on notifications for more insightful content.